We partner every day with the Financial Times to bring you Lex on Bloomberg so you can get a sneak peek at the Financial Times flagship column a day early. China's 5 largest banks may have to raise more capital after flooding the nation's economy with credit. Ben McLannahan joins us now from Hong Kong. Ben, this development has been taking place over the past couple of days. Do you really think that China is going to force banks to raise more capital? There's obviously an equation here that it has to hold in the balance.
Yeah, well, China, compared to any other authority around the world, has more leverage over its banks purely because they're mostly state-owned, the largest ones at least. And now the capital question is really coming home to roost. For most of this year, we've been obsessed with income growth, with revenue growth, and with total assets growing about a third from last year. But now the attention is focusing now is shifting to capital. And by that metric, China's banks aren't the world's greatest. They're the world's biggest, of course, by market cap, by net income, by total depositors. But on capital metrics, pure capital, they're pretty subpar.
Now, we heard yesterday that China may force the banks to raise more capital, but the country's banking regulator, Liu Kang, as you've written in the FT's Lex column, said, no, that's not exactly right. So really, how do you parse this? Will the banks have to raise more capital, or is it more of a medium to long-term thing, as Mr. Liu would like us to believe?
Well, China's no exception. Wherever you look in the world, there's confusion at the moment between authorities and investors. No one really knows what Basel's going to come out with next year. And so there's lots of second guessing of what capital levels will be required. Liu Kang, as you say, has been very aggressive this year, talking about the risk of pile-up of bad debts. But now he's focused on capital. And over the past 2 days, he's had to clarify a report that said that 13% capital adequacy was the new benchmark. Today, or rather late last night, the CBRC, the regulator, issued a statement saying that no, there's no 13%, you're not shifting up from 11, but what you're going to have to do is present some kind of plan to us. And that's what we've had today. Reports that the 4 biggest listed ones, plus Agricultural Bank, have presented their plans. And that's knocked the shares today.
All right, Ben, obviously a situation we're going to have to keep a close eye on, given the role that those Chinese banks have played in the economic rebound. Ben McLannahan from the FT's Lex desk in Hong Kong.